Okay, let's get started. Good morning and welcome to today's Tuesday Markets Outlook webinar. My name is Prakash Vijayanath. I'm a senior analyst here at Options Play, and today I am going to be walking you through my thoughts and analysis on the current market. So before we get started, just a quick disclaimer. The types of securities, forms, and research tools used in this video are for demonstration purposes only and should not be considered a recommendation by Options Play or a solicitation or an offer to buy or sell any securities. This video is not intended to be used for individual tax, legal, or investment planning advice. Our agenda for today will be kicking off with the major equity indices, highlighting some key levels to be made aware of. And we are seeing some very positive action from the large caps, namely the S&P and the NASDAQ. So we will be taking a closer look at that. From there, we'll be moving on to fixed income and commodities. We'll take a look at the sector rotational model, highlighting which sectors are outperforming and underperforming the overall market. We'll take a look at some subsectors of interest that I have for you today. And we'll end today's webinar with some bullish and bearish market observations. So starting off here with the S&P 500 using the SPY ETF. And we can see the price is now at a very critical area and also made fresh 2023 highs on Friday with price just shy of 420. So we have 419, 420 being the key area because it is the 23.6 level on the weekly time frame. But price is also showing plenty of momentum heading into that area. And despite the uncertainty regarding what is a major theme now in markets, the debt ceiling, despite that uncertainty, equities still seem to be holding on quite strong. Normally, equities and markets in general don't like uncertainty. But we can see here that despite that, we have seen price form a new higher low at 405 and continue to consolidate just before a resistance level, indicating that a breakout was imminent above that area quite soon. And looks like we are now getting that breakout. Now, when it comes to the macro side of the picture, obviously the debt ceiling is playing a crucial part. However, the repercussions of lawmakers not agreeing on lifting the debt ceiling will be disastrous. I'm talking catastrophic for the domestic markets, catastrophic for the international markets as well. And for that reason, I simply think that it's a fairly easy fix to agree to lift the debt ceiling. Obviously, the Republican lawmakers do want Democrats to cut on some spending, and that is really, that's where the gridlock lies. But there's still a few more days to go until the deadline. And I am pretty confident that, something as simple as lifting the debt ceiling to avoid what would likely be a catastrophic crash globally, that's a pretty easy solution for that. So for that reason, I don't expect the debt ceiling to play a huge impact here moving forward for equities. And that is why we are now also seeing so much momentum, despite uncertainties of the debt ceiling. So much momentum in the last few days, which is quite encouraging here for the S&P. Okay, moving on to the NASDAQ 100. So we have outperformance in the NASDAQ 100, which we've highlighted now for the last couple of weeks. Obviously, with the NASDAQ 100 being more exposed to growth and technology names, markets are also pricing in interest rate cuts later in the year. So that is going to be a tailwind for the NASDAQ 100. On top of that, the NASDAQ 100 is not exposed to those large financial institutions like the S&P is, which, with the banking turmoil that happened quite recently, that has been a headwind for the S&P, and it's largely remained unaffected here for the NASDAQ 100, despite this very limited pullback, but immediately we saw that move higher. So when it comes to the NASDAQ 100, the next key area, after breaking above this 335 previous swing level, I would have said that was minor resistance. Turned out to not be any resistance at all. We saw a strong breakout immediately. It looks like price is continuing to rally towards the 340 level. And if it can break above that, we have 360 as the next key area. Previous area of support on the weekly time frame, and also previous area of resistance. So that would be the second upside target after 340. The one thing I will say about the daily time frame is that price has approached an overbought condition, as seen with the 50-period CCI, which is a blue histogram, above 200. So that indicates an overbought condition. And usually what happens is we see a short-term pullback before continuation and trend. So that short-term pullback, we still have the 335 level that could act as a support area for the Nasdaq 100, or we could see consolidation until momentum starts to decrease before move higher. But when it comes to entering short-term long positions for the Nasdaq 100, my opinion here would be to wait for the pullback or wait for some consolidation and wait for momentum to actually get to more respectable levels and really just away from that overbought condition. But overall, things looking very positive for the Nasdaq 100. On the other hand, we have small caps here with the IWM Russell 2000 ETF. And yes, small caps in the last few days have been showing some bullish price action, but it's still below a key area and still significantly underperforming the S&P and the Nasdaq. I mean, the S&P and the Nasdaq are making 2023 highs, whereas IWM is still a very, very long way to go to even reach the 2023 high of just shy of 200. So the banking turmoil did hit the IWM quite badly. We saw a strong decline from 188, which was a 38.2 fib level, to the 50% fib level at 170. This happened in a matter of a week, basically. We saw price managing to respect the 50% fib level at 170, acting as a very strong area of support, with price not really ever closing below that level. However, we have seen a lack in upside momentum. The one thing that has changed over the last few days is that momentum has turned positive, and the rate of momentum is quite high, approaching this 180 minor resistance level. So this would indicate that a breakout is certainly possible for small caps, and we could see a continuation in this trend to 188. However, we're not 100% sure on that certainty yet. So let's see what happens over the next few days, where the IWM can actually break out above 180, because that would open the door nicely for 188, or would it continue to stay within this range, this very tight range between 170 and 180. But either way, we are still seeing that underperformance in small caps persist relative to large cap names. And I think large cap names is really where you want to be exposed to, as opposed to small caps. All right, moving on to TLT, which is the Treasury Bond ETF. Now, TLT, if you followed me for the last few months, this has been a very nice short bearish trade opportunity over the last few months, because it allowed us to play with the 108 key area of resistance. That 108 key area on the weekly time frame, as you can see, yes, it's been providing resistance over the last few months, but it was also previous area of support. So after price made a low at 92.50, we saw a rally back to 108 and multiple retests of 108, but ultimately those failed, and it provided nice risk to reward bearish opportunities. What we saw more recently, though, was price making a new higher support level at 104. Previously, the support was at around 100. So that indicated that there was some buyers, and we were going to see potentially a breakout above 108. However, that has not turned out to be the case. Obviously, the debt ceiling has played a bit of a part in this, and we are seeing price break back below that 104 level, which is quite significant because it indicates a move to 100, which is what is currently happening. So I do expect the bearish momentum to continue. Again, that being said, price is oversold, so we could get some consolidation shortly or even a retracement higher. But overall, the sentiment here does remain quite bearish. 100 is a key area of support. If it breaks below 100, the next key area is all the way here at 92.50. So that's a significant potential drop for TLT. But let's see what happens with price at that 100 key area of support. Right, moving on to the US dollar. So the US dollar has seen a shift in momentum over the last few days, or the last couple of weeks now, really. Momentum turning positive, and price finding support at 101. That's a major area of support. And despite it consolidating there for quite some time, has now managed to break above it, and even breaking above its 21 and 55-day exponential moving averages with strong momentum. So that's a very big move here for the US dollar, and it does indicate a continuation higher towards that 105.50 area. This, however, is a major area of resistance. So we will see how price reacts to this area. But for now, things are definitely looking more positive for the US dollar. Right, moving on to gold. So first thing to remember about gold is that it moves inversely to the US dollar, especially in the short term. Second thing is that it is a safe haven. So since November, we had a very strong rally or rotation into gold, and that was marked by this very strong rally. Plenty of momentum to see gold rally from the 150s all the way to just above 180. From there, we got a bit more of a significant pullback back to around the 170 area, and a continuation higher again with some strong momentum. Now, since then, gold has been losing out on some momentum, and momentum has actually turned negative in the last few days. And you can see the price has struggled to really break above that 190 area. Now, in the last few months, I have said that my price target was actually 192 because I would complete this huge triple top pattern or formation that we can see on the weekly time frame, and it would give the best possible bearish entry point or risk to reward for a bearish entry point for a revisit back down to 183 or so. Price didn't quite get there, which is a little bit frustrating. It was just a little bit shy, but overall, we did see some very bearish price action at around 190 on the weekly time frame, multiple rejections. But on the daily time frame, was more looking like consolidation. Price was really, during this period here, was reluctant to move lower, but finally we have now seen a break below that 185 area, and price heading low towards the 180 key area as well. So quite a few key areas here for gold, but overall the sentiment on a daily time frame and on the weekly time frame does remain bearish. Price set to open a good bit lower this morning as well. So we have 180 and we have 177. This area does look like the key short-term target here for gold. All right, taking a look at oil using light crude oil futures. Now, oil, I'm going to say the same thing that I said last week, that price action is extremely ambiguous, and it has been ambiguous for the last few weeks. So we have some support here, or previous support turning resistance at around 73. Price clearly respecting that area, but we also have support here at 70. So price is stuck in a very, very tight range. Originally it was stuck between 81 and let's say 70, which was a tradable range. You could go short here, go long there at support, short at resistance. And it provided, yes, short-term trade ideas, maybe lasting a week or 2 weeks, but it was still a tradable range. Whereas this range, a lot less tradable unless you're trading, unless you do very high frequency trading. So like I said, price action quite ambiguous. What I'd like to see is a breakout above 73, which would signal a long opportunity, potentially a revisit to 80, or a breakdown below 70, which would signal a short opportunity towards 65, 63 or so. Overall, though, on the weekly time frame, taking a step back, we do see momentum being negative. Price clearly is still under a bit of pressure. Recession fears naturally are still there, but has seemed to be dissipated. So again, very tight price action here. Not the best thing to trade currently. Okay, moving on to sector rotation, we have 6 sectors in the improving and leading categories and 5 in the lagging and weakening. Starting off with our leading category, we have communications and technology, both providing leadership, however, both losing out on momentum and actually trending a little bit lower. Nothing to be too concerned about for now. We still have a very recent rotation into AI-related stocks that has seen technology actually find some momentum on a lower time frame. And this is a weekly time frame here for sector rotation, so there is a bigger lagging component. So I wouldn't necessarily say now is a good time to be bearish on these 2 sectors. Discretionary, on the other hand, was in the improving category and was actually trending lower, but managed to rotate a little bit into the leading category. And I'm not putting discretionary in the same category as technology and communications, because one, retail sales data last week came out quite weak, and that doesn't bode well for discretionary long term. And also, it's very close to the center of this chart, and normally you want to focus on the names that are further away from the center. So discretionary, yes, it's in the leading category, but I would say, it's not a false signal, but it's not really in the same category as communications and technology. Now, nothing in the weakening category, and in the lagging category, we have financials, energy, real estate, industrials, and materials. Financials actually showing some momentum after severe underperformance in the last couple of months, as well as energy. But let's see if the momentum in energy actually lasts, because, you know, with oil prices essentially stagnating, we could see a drop off with this momentum. Real estate continuing to move left, indicating weak relative strength. And in our improving category, we have all our defensive sectors in staples, utilities, and healthcare. Now, interesting enough, utilities and healthcare, you know, looking like they were initially rotating towards the leading category a couple of weeks ago, now seeing outward rotation and rotating towards the lagging category. Now, that indicates a risk-on environment. Investors are less uncertain or less worried about markets and are rotating, and from rotating into these safer sectors, they're now rotating out of them and rotating into more risk-on sectors like technology, or even discretionary for that matter. Usually there'll be also discretionary, although for now I'm still a bit hesitant on discretionary. And healthcare as well, look, showing some very good momentum from the lagging category into the improving category, and actually performing the best so far out of all these defensive sectors, not really experiencing the same outward rotation. So healthcare is still doing strong, still being a good, strong for the defensive sectors. Okay, moving on to some subsectors of interest that I have for you today. We have TAN from last week, a bullish idea, actually from a couple of weeks ago, which price was trading, at around 71. We said we would be bullish if it moves lower towards 67, which it did, and it managed to bounce higher. So technically speaking, the bullish thesis on this trade still remains intact. However, what did concern me last week was the rejections of 74 and the rejections of the 55-day exponential moving average, which is a blue line. And price actually moved lower over the last few days. However, we saw some very bullish price action yesterday. And because price is still above 70, my bullish thesis remains intact. And I still think that there's a good chance of a move higher here for TAN, potentially revisiting at 76 area or even 80. Okay, DRIV was our other idea from last week. Actually, again, 2 weeks ago, bullish trade idea. The thesis for that was simply this 2180 area of support. Price is clearly respecting it, and we have seen a more recent move higher. However, the one concern that I had was this downward trend line. And last week I said, look, we have to see price actually break above this trend line for further confirmation, which we have seen, and price is continuing higher now with some very good momentum. Not yet reaching an overbought condition, but if it continues like this, that may be reached soon. Price is set to open a little bit lower this morning, but again, the bullish thesis remains intact. There is still some very bullish price action here for DRIV. I do expect a continuation higher with the major targets here at around 25. Yeah, taking a look here at Moderna, which is a new trade idea for this week. So Moderna, part of the biotechnology subsector, and we all know Moderna as a company that produced drugs for COVID-19, or the vaccine for COVID-19, I should say. And that was really the only thing that they produced, which is why it was a very risky investment from the get-go. Yes, it had a lot of momentum on the weekly time frame to see price reach nearly 500, or did touch 500. And as competition rose and as COVID became less of a hot topic, really, we have seen a strong decline in Moderna. But price is respecting this 120 major area of support and is once again approaching that level. It hasn't quite reached there, but it is on a bullish watch list. The last 4 days of price action, very limited. We are seeing maybe a short-term retracement higher before another minor leg lower. But if price reaches 120 and we see that bullish price action, I'd be very tempted for a nice risk-reward bullish opportunity here for Moderna, potentially back towards the 160 area. From a fundamental perspective as well, Moderna is expanding on their product range. So that does offer diversification within Moderna. And I don't think the fundamentals are bad long-term. Just the short-term fundamentals, or short-term price action, I should say, was clearly hit, as COVID became less of a hot topic. Whereas now, I do see a nice buying opportunity at around that 120 area. Moving on to Fidelity, another bearish trade that we have actually had now for a couple of weeks. And Fidelity was a long-term bearish trade due to the fact that it has a long-term bearish trend. We've seen quite a systemic move lower, with price forming a new area of support, which it eventually breaks below to form resistance. And that has happened for quite some time now, especially recently, which leads me to our current bearish thesis for Fidelity. Price previous area of support at around 60. Eventually that level broke, and we are now seeing price respect the previous areas of support, now turning resistance. And once again, price is at that key area of resistance. So yes, I would have preferred for this to move lower already, as this is a trade that we've been in now for a couple of weeks. However, the bearish thesis still remains intact. Price is yet to break above that $60 level, and the risk to reward clearly favors the downside and a continuation of this longer term bearish trend. In terms of downside targets, you're looking at around the 48.50 area, or potentially as a secondary target, a new lower low. Very difficult to assess where that would be, but the first target would be at around 50. Okay, another new idea that I have for you today is CrowdStrike. So CrowdStrike, yes, this is actually a bullish idea, and yes, it has been on a bearish trend for quite some time. As you can see on the weekly time frame, quite a violent bearish trend from 300, actually breaking below that 120 major support level, but managed to break above it, looking like it was forming a new lower high. But price has actually invalidated that and has managed to find some support at 120 to actually bounce higher, therefore making a higher high on the daily time frame at least. So yes, at 140 level, key area of resistance has now been broken. Momentum very strong at an overbought condition. And for that reason, I don't think it's a very actionable idea right away, unless you're very long term, unless you want to buy the shares for a longer term investment. However, for the short term, I'd be looking for maybe a pullback towards the 140 level, bullish price action for confirmation for continuation higher, with 170 would being that upside target here for CrowdStrike. Right, moving on to lows. So lows slash their revenue and earnings expectations for this year, which is why we are seeing price opening significantly lower at around just above 200. Now, when you look at it from a bigger picture on the weekly time frame, you can see that price is clearly at a range between 210 and around, let's say, 190. Now, more recently, price has reached the 210 level and has failed to break above it, and is now showing some very bearish price action in the last couple of days. So for that reason, I am looking for a bearish trade opportunity here from 200, even though it's set to open a little bit lower this morning. I'm looking for continuation of this reversal back down towards the low 190s. And with that, that is all I have for you today. Thank you so much for joining me, and I hope you all have a great trading week. I will see you next week. Goodbye.